So in the last video, we spoke about operational sides of the brokerage and getting started, bank accounts, payment service providers, integrations with those payment service providers into your website. These are the nuts and bolts of what you'll need to do very close to launch. And some common pitfalls, the most common pitfalls I think that are critical to the business post-launch are centered around this area. And when it comes to payment service providers, for starters, you really want to make sure that you have a full grasp of the terms and conditions around the payment service provider that you decide to work with. And in fact, it's probably advisable to have more than one payment service provider on board with your broker when launch time comes, in case for whatever reason you need to switch from one PSP to another. It's just a security measure for the broker. But definitely dig through the terms and conditions, or if you're working with Forex officials, we can give you some really good guidance on, if you're a new broker just entering your first few months of business, who are the best payment service providers, who are the ones who are most optimal for a young broker who's looking to have the best fee structure you possibly can have, the best withdrawal conditions from the payment service provider, as well as the easiest integration. Brokers who don't do their homework in this area many times can find themselves in a position they don't want to be in a few months later after launch, because they find certain things don't come as easy as they initially thought. So this landscape can be navigated quite easily, and some aspects of it are very straightforward. You just want guidance, because there are many PSPs out there. You'll find all of them will talk to you, many of them will want to do business with you, but you really want to know who are the best ones to work with for your type of business, that young broker. And so just let us help you handle that. So what we find is many young brokers are often started by traders themselves. So the head partners or the head person in the broker comes from a trading background. And so it's very important when you're switching from the trader role to the broker role, to understand that you're navigating different risks as the broker than you were as the trader. You are still presented with market risk, and that has its advantages, but you want to make sure that you're not viewing position taking through the brokerage the same way you do when you're a trader. When you're a trader, you might have a very high risk profile, which is fine. Many traders have that, and in that sense, you would fit a certain profile of a trader. But the brokerage is a different business, and if we're looking for longevity of the broker, which I think most people are trying to replicate some of the successes you've seen brokerages have over the past 5-10 years, really growing to very high levels, then you can't treat the broker business kind of as a gamble in the risk management sense. You really have to know, for the broker, what is my risk? It's really the traders that are on our books, and the risk management involved in managing the client's positions. And so this gets into liquidity providers, this gets into A book, B book, who is the proper counterparty for certain traders versus other traders. One of the more in-depth topics, but a mistake you can make is going at this alone. As far as determining how to manage this area of the business if you don't have the background. It's something that you can learn very quickly, okay, mind you, especially as a trader. If you're coming from a trader's background, you'll intuitively understand much of what is involved here, but you definitely want somebody to help steer you in the right direction. One, to protect the broker, first off, but also to maximize your revenues, because this is the nitty-gritty of how you earn the maximum revenue per client, is really understanding how to manage the risk of each client appropriately. Like many new businesses, startup capital and how much you're looking at in that area is critical to what you're going to be able to achieve in the first 6 months, the first year of the business. I think the brokerage industry is attractive because there's different layers of regulation. And so the barriers to entry are not super high if you know how to enter the market properly when it comes to regulation. And so really having a grasp of what your budget is, what type of investment capital you really have access to, both in the beginning and on an ongoing basis for the first 6 months or 1 year. And with our guidance, if you have solid numbers there that you can count on, you can find your way into the market as a broker, which I think is a very good thing. It's a matter of coming into the market on a cost basis in a way that makes the most sense for you, and that leaves you with the vast majority of your investment capital for the first year, the first 2 years at your disposal post-launch. I think a mistake that sometimes brokers can find themselves in is they find themselves in a position where a lot of their capital is getting tied up leading up to launch, okay, for reasons that they didn't foresee, be it the consulting work that was done to help them get in to launch the broker, be it regulatory capital that they have to tie up that they weren't previously fully aware of, and other factors as well. The good news there is there's a host of costs that you might think are essential to launch in the broker that actually aren't, and some of them can be postponed till after launch in some cases. But this is an online business for the most part. Many brokers are operating in a capacity where you might be starting the broker from an existing office already. You might not be acquiring new office space. You might not be hiring new full-time sales personnel. You might not be hiring a full-time marketing person. Quite frankly, because you don't need to in the first few weeks and months, or maybe even longer, depending upon the type of assistance that you're getting from companies like Forex officials. And so many times when people start companies in general, not just brokers, you kind of come into the business with some assumptions that might be slightly out of line. And what those assumptions will result in is sometimes over expenditure, okay, leading up to launch, which you want to avoid, because you really want to have the vast amount of capital at your disposal post-launch, because this business is run largely in a digital marketing fashion, where you want to have a lot of your capital at your fingertips. So once you see your early growth, revenue starts coming in, and you see the model is working, the machine is working for the brokerage, then you want to have that capital at your fingertips to really deploy to accelerate the growth. And sometimes brokers don't see themselves get to that phase, okay, because a lot of that capital has been utilized already. So we will help you. There's a budget. There's projections that we can share with you that we already have in place based on what your budget is, and we can make sure that you get to that point where you can see the business thrive and really move forward. So as we've discussed previously, this business is largely run in a digital marketing capacity, and a big certain statistics that you're going to look at over and over again when it comes to the brokerage is, what is my cost per lead? So how much does it cost me to get a visitor to my site from a certain region of the world, get them perhaps to open a demo account, which then makes them a lead for sure. How much did it cost for me to acquire that lead? And then how much is it costing me to convert that lead, or cost per acquisition? And many times when people come into the market, they don't plan ahead in this area in particular more than any other, because that, if you break it down to its bare bones on an ongoing basis after the broker launches, it all comes back to this, because you're going to be spending money to generate traffic to your site on an ongoing basis, and it's all about optimizing this process. So for one, you also want to think ahead about the website, which oftentimes is not done as well as it could be. You might have another business that has a website, and you use the same web designer perhaps to build your FX broker site. Nothing on the surface necessarily wrong with that, but if your web designer has never built an FX site before, isn't completely familiar with how FX sites convert and how they operate as a conversion funnel, then that person, even though you might have a close relationship with them, might not be the ideal person to build your FX website. You want to have somebody who's been in the industry before, who understands the conversion funnel as it operates in the FX industry, so that, because really what you want to see happening is, even in the early days after the broker launches, you want that website converting for your broker by itself, or as I like to call it, generating effortless deposits, somebody coming to the site, filling out your application, depositing funds, and in many cases, nobody on your team ever speaking with this person. And isn't that a wonderful place to be if you can achieve that with your website? So with our guidance, we help you do that. So don't rush in to spending on the marketing side without really some sophisticated guidance in this area, because you want to get the greatest bang for your buck here. You don't want to have to redo your website a couple times, as we've seen brokers have to do in the past in the beginning. And you want to target the areas geographically that also make the most sense for the brokerage. So getting leads and and traders in different parts of the world costs different amounts of money. And so you want to see, okay, is in my first 3 months of my business, I want to target English-speaking countries, and I want to be paying no more than $2 per lead. You might have those variables in your mind. With that type of information, our team can be deployed and actually go to the countries and get that for you specifically. But you got to know where to go first of all to within your metrics. And so the key point there is do your homework ahead. It can be time consuming to do on your own. So just have a chat with us in this area, and we can set you straight. It's a big misnomer in the industry that regulators are the enemy. Any regulated broker, of course, in a major jurisdiction is open to infringing upon regulations and as a result being fined or some other measures being taken against them. And so that naturally, I think, creates an environment, like a contentious environment that, or on the surface, what looks like a contentious environment between brokers and regulators. But it doesn't have to be that way. I was in Australia myself from 2008 to 2011, meeting with the Australian regulators regularly for the brokerage I was with at the time. And one thing they constantly said to me is, we want to work with you. We want to understand your business. We want to help you. And I think for the most part, many regulators also have that stance, but it can become blurred, especially as you get so engrossed in the day-to-day of the business. And if the broker is growing rapidly, which we fully expect if you're working with us, sometimes the regulatory side can seem like a hurdle or something that is slowing the growth of the broker, when in fact, it shouldn't be like that. And so this gets into the compliance area and just making sure you're ticking the proper boxes when it comes to compliance, how you're handling clients, how you're handling client money, all of these things. There are lighter regulatory setups in the beginning, which in many cases are advisable for a young broker. So you don't need to dive into the most heavily regulated jurisdictions when you launch your broker, even if you have the capital to do it. So even if you have in the millions of dollars to put up to meet certain capital requirements, and you're willing to go through the process of getting fully regulated in certain jurisdictions, that might not make the most sense for your broker actually in the first year for different reasons. When it comes to growth, when it comes to a certain base of clients, if your goal, let's say in the first year is, we want to get to a base of 10,000 clients within our first year, and that's our goal. We want an average deposit of this XYZ for those clients. Does going into a heavily regulated jurisdiction make the most sense based on those goals? Or does it make sense to go into a more lightly regulated jurisdiction, get to those client numbers that you want to get to within that light regulation for different reasons? You can offer higher leverage. You can offer things like deposit bonuses under lighter regulation. You can do things that appeal to a very high percentage of the trading community around the world, which will help boost your account numbers in that critical first year. And then you have the freedom and more leeway at least to then potentially look into heavier regulation later on, which for the most part, that model makes more sense for most brokers than going, diving headfirst into a very heavy regulatory environment. So for any broker, the sales strategy will be an extension of your brand, and identifying your brand early on is critical. Now, there might be adjustments that you make to that brand, certain tweaks over time based on your product offerings, based on your personnel, and what best fits what your personnel can achieve for the broker. But it is important to develop a strong brand in the beginning for no other reason than maximizing client loyalty, right? So we know that traders in this market sometimes can be fickle. So if they see a better offering, or if another broker is enticing them with something like a deposit bonus, let's say, you want that trader you want to make as certain as you can that as high a percentage of your client base is as loyal as they possibly can to your broker. And your brand is a big part of achieving that. You want your clients to be proud that they're trading with your broker. And how do you achieve that pride factor in them? Well, there's very specific things that you can do to help do that. You can tie that into education. You can tie that into different reward programs you offer the traders, different contests that you can have ongoing that have continually new winners and people always wanting to be the, achieve that top of the leaderboard, if you will, for certain contests. And so there's very specific strategies you can have built into place from day one that reinforce the brand and make that trader a proud trader of the broker, right? What do we know about traders? They make and they lose money every day. That's unavoidable. So every broker faces the situation of a trader maybe having a bad day, a bad week, or a bad month in the markets, right? And they're trading with your broker when they have that down month, let's say. And the task there is to keep that trader trading with you, okay? And help them see that trading with your broker and your brand remains the best option for them. And if your brand isn't strong enough, they could see moving their account elsewhere as being a better option. And so working with us on the marketing side, and then your personnel, the team that you're building or the team that you're outsourcing, is a big part of this as well, because they're reinforcing your brand. They're on the phone, they're on your live chat, they're on the email, reinforcing what your brand is telling these people on your website. And you want to make sure that that is a cohesive message. It's always coming back to center, and we help you do that. That is a bit of a task. It takes some time. It takes some effort. Going at it alone is not an easy task. You don't want to get burned out in this process. So let us help you, and we'll get it done.